there was a lockdown. They were not able to open up their premises and work. So we understood that. We spoke to the landlords, and the landlords accepted to give rebates. So we gave rental rebates to our tenants, but we didn't actually reduce those rentals. We just gave them grace periods, but maintained the level of the rentals where they were. And this we did because we knew that it would be easier that way than trying to bring back the rentals to the level they were once you'd brought them down. So it worked really well. We stabilized the businesses of our tenants, and we were able to maintain relatively stable trends of rentals across all sectors. As you can see, the yield rates that have been projecting over the last few years, the highest yields are within the industrial sector, sitting at about 13%. Then the office yields are between 8 and 10%. Those ones have dropped slightly. Retail yields are between 7 and 9%. And residential yields are sitting anywhere between 7 and 9%. All this said and done, property yields are always performing better than your fixed deposits, giving more support and lending credence to the fact that it is a very good asset class to be holding, especially as part of our diversified portfolio. So, commercial market overview, we currently have about 4.8 million square foot of lettable office space in our market today. And this is prime office, the prime office sector, which is your grade A and AB, and maybe the top end of B, the B sector. And we have about 2 million square feet of lettable offices under construction. That's about 200,000 square meters of office space under construction. It's quite a lot, and more so given the fact that it is going to come online nearly at the same time. As I've said, we're looking at average gross income yields of about 8 to 10% and net rents of between $14 and $18. Still one of the highest rentals in the region for commercial office rents. We're seeing average occupancies in the prime sector of about 91% as we sit, and average service charges at about 3.5%. Costs are going up. As you know, inflation is at an all-time high. Interest rates are high. Fuel costs have increased. So this is having an effect on the cost of doing business, which will, in the short to mid-term, have an impact on the cost of running buildings and expenses and operational costs of property. Moving over to the retail market, as I've said, we're seeing average yields of about 7 to 9%. We managed about 10 retail centers in Kampala, and across the assets portfolio, the assets under management, we're seeing an 88% occupancy across the 10 malls that we're managing. And these are the biggest and the best and the major malls in the city. And again, as I explained, we've managed to maintain this occupancy because we supported the tenants throughout the pandemic. We tried to minimize the stress on them by forcing them to pay rents, and they were thus able to maintain their businesses and stay in occupancy and in occupation. We are seeing an annual turnover growth of about 15% year on year, and annual footfall has also grown by 21%. Residential overview, we have about 2,800 units in your prime locations: Kololo, Nakasero, Bugolobi, Naguru, Mbuya. And we have about over 350,000 units under construction in the prime retail sector. And we're looking at yields, as I said, of about 8 to 10%. Industrial market overview, that's self-explanatory. I won't go into those details. And as you can see, the trends from 2017 to 2021, you will notice that 2019 seemed to have been a peak for office occupancies, and that tapered down during the pandemic and began to pick up in the early few years of 2022. The first 6 months, the first 2 quarters were very good, and then halfway through the year, we've seen a slowdown in performance of the property sector. However, all that said and done, it doesn't mean that the opportunities are not there, and this is where I would like to dwell and spend a bit more time. But I would first like to talk through some demographics and demand drivers that make these opportunities more alive. And in the words of George Bernard Shaw, he said, And George Bernard Shaw was a British socialist and a theatre critic, and he said, don't wait for the right opportunity, create it. Opportunities will always be there. And even if they're not obvious and visible to the naked eye, they're always there for you to exploit and to create. So I agree with him. We need to go out there and create the opportunities. Whether times are good or times are bad, we need to go out there and create the opportunities. And there are a lot of demographics and demand drivers, and there's a lot of positives in this market that make real estate a very good opportunity to exploit. For example, we have a housing deficit in Uganda of 2.1 million units. That is quite something. Our annual housing requirement in urban areas is 210,000 units annually. We have a housing requirement for Kampala alone of over 30,000 units. These are opportunities everywhere. Every metric that I'm reading out presents an opportunity. The median monthly household income in Uganda is 190,000, and the monthly household income in Kampala is 667, just under 700,000 shillings. The price of the most affordable house by a formal developer is under 60 million shillings. Okay? 71% of households in Kampala are renting. Therein lies another opportunity to build houses for those who are renting, or create more units that you can capitalize on this rental market right there, or think about other opportunities like rent to buy, okay, for your market, captive market out there. The annual housing demand in Kampala, based on the 3% population growth rate, is 3%. Sorry, based on a 3% population growth rate is 30,000 units. And the population below 30 years is over 75%. Now, that is a huge, huge captive market that we have right there. We have a young population. We could reap a huge demographic dividend from this young population, because it means that we have got millions and millions of individuals who are going to either require to rent a house or will be able to buy a house moving on. So with this in mind, we also look at the statistics, the literacy rates. We have a very, very high literacy rate in Africa as a region, and I think we're number 3 now in terms of literacy rates in East Africa. 46% of our urban population is literate, and 54% of our rural population is literate. And this bodes well for the real estate sector and property, and understanding, getting people to understand what real estate investment is all about and how you can appeal to this target market. We have a very high urbanization rate. Currently, 25% of our population lives in urban areas. But it begs the question, do we have enough accommodation for these people who are in the urban areas? And can we exploit the demand that is coming every year, year in, year out, by the rural-urban migration? Population projections in major cities. As you know, a lot of the cities in Uganda were given city status, and the populations there are growing. I'm sure no one knew that by 2030, we are going to see a population in some of these cities reaching 9 million, just as an example. The biggest growth rate is in Wakiso district. Wakiso district is a region, entails Busiro, Chadondo, and it is the districts that are neighboring Kampala city, or the CBD, basically. And the fastest growth rate is there because this is where a lot of that urbanization is taking place. This is where the rural-urban migration is happening, and the population in these areas is bustling and is growing, and that is a huge captive market and a huge target market for the property sector and for the housing sector especially. So the opportunities for residential rental accommodation are real and are there. Unfortunately, a lot of, or most of the formal developers are more interested in the high end. But if I may repeat what I want to say today, is that the high end of the market is very small. It only accounts for 3% of the demand, the total demand of housing. The majority of that demand is within the low-income sector, and the middle income sector. As you can see, 60% of the effective demand out there is in the low income segment, and 37% is in the middle income segment. And I'm sure a lot of you are sitting there and they're saying, but what's low income and what's middle income? These are numbers that oscillate all over the place, but if you can work on middle income of about 100 million plus, 150 million shillings, okay, to about 300 million shillings, take that as a rough benchmark for your middle income, and your low income, you're looking at below 100 million shillings. That is really where the deficit is. And as I said, 71% of our population is renting. Okay, so they can afford to rent. They might not necessarily afford to buy because of the cost of finance. But if we come up with more creative products for them, like renting to buy eventually, this could be another way of converting a lot of those renters into homeowners. So we took an example of the Wakiso district as a node that we're looking at. This is a node that's driven by young professionals and business people. A lot of our bank tellers, a lot of the people in the financial sector, in the corporate world, are living in rental accommodation. They're living out in Greater Kampala, in these Wakiso districts and the other divisions. And they are all paying rent. They can afford to pay rent. They probably can't afford to buy, given the cost of finance and the cost of property, but they can certainly afford to rent, and if helped to rent to buy or given products that will help them to own, they will be able to own as well. And because of their ability to rent, we can see that we can get high yields in these tenement setups of between 10 and 15% for that low to middle income housing. The target rent in these suburbs is usually between 300,000 to about 800,000 on average, okay? That's where the opportunity is lying there. And I just thought I'd give you some examples of what these look like. If you could just flick through the next few slides, you can see that we have 14% yields there. Cost of construction is reasonable. And you can see that we have some decent yields there, 12% yields, okay? And decent units that we're talking about, 15% yields. And I'll speed through this because I can see Anil is coming to tell me to hurry up. So you can see the kind of constructions that we're talking about. Decent accommodation that people are willing to pay for. Incidentally, there's never vacancies in these units. There's always somebody to fill a unit as soon as they're empty. Such is the rate of demand that we have, and one that we really need to consider, instead of everybody and all the formal developers always going for the 3%, the high income 3% gap that everyone is looking to fill, which is already oversaturated. And this is only pushing down the rentals in that sector, and the vacancies are remaining high because there isn't that much uptake at the moment as we speak. So it puts further downward pressure on rentals in that sector. So I'd like to move on to the retail investment opportunities. And these are real opportunities that we have, and I just thought I'd put them out there. Have given you the metrics and what's happening in the retail sector, and we do have a few available investment opportunities for you. The first one is a shopping center, which is a blue chip investment, 10,000 square meters of gross lettable area. And this includes a 52-room branded international hotel, generating $2 million a year. It's multi-tenanted with international and regional retailers, 200 parking bays, and that is going for an asking price of $25 million. The next one is a shopping center, also another blue chip investment, 14,000 square meters of gross lettable area. How many minutes do I have left? How many minutes do I have left? Okay.
Meet Professor Petero. He knows something every hustler in UG is gonna love.
Oh, see. You see, I was just trying to get the documents to register for Airtel Money.
You don't need the documents. You just set for register.
Is a blue chip investment in the CBD or close to CBD. It has a gross lettable area of 14,000 square meters, generating $2.1 million per year. That is a net income, incidentally. And we have an opportunity to increase the income because right now it's only 70% occupied. And it's multi-tenanted with international and regional retailers, 500 parking bays, and all the tenants have long leases, incidentally, 6 to 10 years, and that has an asking price of about $35 million. We then have two redevelopment opportunities. The first is a shopping mall with 6,000 square meters of GLA, generating $350,000 per annum net income, with an opportunity to increase that to about 40%, and that's going at about $6.5 million. And it's an inner city mall, so very prime location, and certainly ripe for redevelopment right now. And the other redevelopment opportunity is a vacant prime retail location that we have that can take about 6,500 square meters development. It's being sold with vacant possession, 550 parking bays, and a prime location with an extremely busy node, and that the asking price for this is $7 million. So if anybody has an interest in the retail sector, please feel free to come and talk to me after, and I'll be happy to give you more information on that. The next opportunity is in the student accommodation sector. And I'll rush through this quickly. Makerere University has a student population of 31,250 students, and is growing at about 4% per annum. Hostel rentals range between 600,000 and 1.8 million shillings per bed per semester. Currently, only a total of 5,000 students are being given accommodation by the university. And that accommodation, I'm sure many of you have been to university and you've seen the quality and the standard of it. So that accounts for only 16% of the total population. That is literally only scratching the surface of the accommodation that students require. The balance of the accommodation, 80% of it, is provided by private developers in and around university. Some students have to commute very long distances to get to campus because the accommodation that is close by campus is not enough. The accommodation on campus is not enough. And the university enrollment is putting pressure on the existing facilities and is certainly not enough. So therein lies an opportunity, ladies and gentlemen, within the student accommodation sector. And this is only Makerere University, not to mention Nakawa, Chambogo, KIA, and all the other universities within the city and Greater Kampala. So student accommodation sector is certainly one that I would say needs to be considered because education is a very, very rapidly growing sector. We educate our children in this country, as you know. We take education seriously, and parents would rather go hungry than not educate their children all the way up to tertiary education. And we're finding that, and I sit on the board of the Makerere University Holdings Limited, and I know that we're looking for investors to put up student accommodation on campus, let alone renovating and redeveloping the existing accommodation that is on campus and that is substandard. So there are very many opportunities in this sector which I would like you to consider, please. And then I'll just touch on a few emerging trends in the real estate sector for you to go away and consider. I've talked about the suburban neighborhood malls of 5,000 square meters, which are now gaining in prominence and in marketability and interest. And these are usually with an anchor tenant of about 1,500 square meters. And this is where the future of retail growth is. I think suburbs are becoming self-sufficient. They're becoming autonomous in the way they are, and districts and divisions in the way they're governed. And people are finding it less and less necessary to come into the CBD to do whatever they want to do, because our suburbs are growing, and they're becoming self-sufficient and able to provide all the amenities and the facilities that are required, which is supporting this size of mall, neighborhood malls in the suburbs where they are. And we're seeing that the lettability is very good and the incomes that are coming from there are also very good. I've talked about the office recovery post-pandemic. We're seeing that it has come back strong again. It's bounced back strong, albeit it's slowed down, but it's going to pick up again. Flexible office options are also more in demand now ever since the pandemic. We're seeing a demand in co-working models and being incorporated into very many new developments that we're seeing now. A lot of co-working space, a lot of spaces for collaboration, and generally a change in the way offices are being designed now. We're seeing also net zero initiatives being given a lot of attention, especially by blue chip tenants who are really requesting and wanting to see a contribution or an effort by developers to consider decarbonizing the developments they're putting onto the market as their contribution, as their global contributions to the environment and towards doing something about climate change. So as you're developing your properties out there, please consider this. Consider the ESG initiatives and the net zero initiatives that you could incorporate within your developments, and there is a premium, there is a green premium to receive on rentals for properties that actually adhere to these net zero initiatives. I think the next thing of note is that the next growth frontiers that we're seeing really are alternative asset classes like healthcare. The value of bed to patient is phenomenal. I think on the last research that I read about that we produced as Knight Frank in 2019, the net value of beds required basing on a bed-to-patient ratio is about $81 million that was out there to be exploited. We don't have enough beds in this country. I think there's a lot of scope to be exploited in the life sciences and healthcare sector. Affordable housing is one that we talk about all the time, every day. I've tried to illustrate where that affordable housing sits, the metrics and the numbers that work, and then again, agriculture as well is one whereby I think there's a lot of scope for us to consider as an opportunity in the real estate sector. So in closing and in conclusion, I still think, as I said, real estate sector or property is an excellent asset class to invest in and remains one of the best asset classes to invest in, especially as part of our diversified portfolio. So please do consider it. And also, there's a lot of opportunities to be offered out there. We're happy to talk to anybody who would like to take this discussion further. I'll be available for the next hour or so, and I thank you very much for listening to me.
I would like to imagine, maybe let me just say this, that Judy, if you had made this presentation before an audience of people with bank balances like mine, the hand clap would have been louder, because we tend to do that a lot. But their hands are more suited to signing checks and holding Visa or those sorts of cards. So do not take it by any means that the muted hand clap is the lack of appreciation of what you presented. One of the markers of interest is that when power went off, they said, hold a minute. They didn't want to miss a second, so you spoke to the right audience there. Mr. Kishka here is the MD. That means beyond him, in his organization, there is the president. So his organization is the organization that is supposed to be the government's arm responsible for housing us, ideally. The detail is different. So, Mr. Kijuka, you probably want to find somebody to invest in your organization, especially now that, to a certain extent, you are left on your own. Somebody here could give you some money. Are the Libyans still with you? Or they used to be? They're still there. So give him a hand clap. He will want to augment this conversation. One special thing about him is that whereas he is the chef, that eats his food, which is not so common in Uganda. In Uganda, it's very possible to find somebody responsible for hospitals, national hospitals, attending private health care. As somebody who studied logic, I don't understand it. For me, it sounds like a chef eating at the neighbors. But he's in charge of National Housing Corporation, and he lives in the estate of the organization he lives. That says somebody. I think the short word is authenticity. So it's authenticity in flesh and blood speaking to us this morning.
Thank you, Samson. As usual, very humorous. Good morning. As introduced, Engineer Kaijuka Kenneth is my name. I am the CEO of National Housing, which is the business arm of government in real estate and construction. I also have the privilege to chair the national platform, the National Construction Platform at the Private Sector Foundation Uganda, which is the alternative business angle, government being a private sector-led economy, and so the private sector players, we are into about 13 sectors, and one of them is real estate and construction. So therefore, as a director at Private Sector Foundation Uganda Board, I have that opportunity to engage with you, and that spans beyond real estate into construction, it be roads, it be water, it be power, it be oil and gas, as long as you're putting your hands into the construction. I'm hoping they'll be able to run just a few slides. We sit at Crescent Towers, 3rd floor, indeed Crescent Towers being our property. If you need office space as an entry point, you can knock on my doors and you'll have office space just across Serena Hotel within the CBD. When the slides show, I intended to say that, yes, national housing is as old as Uganda, and as a matter of fact, all prime locations, any developed area you'll move around Kampala and in the cities, in the countryside, and you see a little bit of planning, a little of decency, a little of primeness. That's the handwork of national housing. And so as I approach you this morning to interest you to come and partner with us, partner with government involvement, it has happened before for the last 59 years, and it will still, oh, I thought it would also show here. I didn't notice that it was behind. So our business mandate runs in all the 4 subsectors of real estate, as mentioned in the commercial subsector. If you're such an investor who is interested in doing arcades, you're doing offices, the shopping malls, the transit terminals, name them, you'll come and we partner with you in rolling out that business. Madam Judy has done a great job in explaining the residential subsector, and this is where we also have great opportunities. If you came, it's our mandate to partner with you to do the accommodation, the estates, the residentials, name them. But also in the industrial space, the real estate that serves the industrial, manufacturing and production sector, it be warehousing or it be factories, we are the arm that you can partner with to run with you into that business. But the institutional side, as you clearly see, she talked about, for instance, student accommodation. You go to all Ugandan universities, students must vent for themselves where to sleep. The university will give you admission, but then the accommodation is to yourself. So it's a great opportunity to invest in that area on a long-term basis through rental collections. Judy has run through a number of statistics, but I'll pick on the next slide. I'll give these highlighters, which will feature in many of the documents that you hold. And because from the construction side, I come with numbers. The 45 million people Ugandans, this is no brainer, we all know today. But we also know that the national housing policy requires that in a fair homestead, you should have about 5 people. And so when you get the 45 million people, because I want to arrive at the deficit we talk about, you're talking about a requirement of 9 million housing units to date. as 45 million Ugandans. When you take the statistic of the permanent sustainable housing units that are available in the residential space, records show we have about 2 million housing units that can go over 25, 50 years time horizon. What that means is that if you needed 9 million, and as a sustainable growing economy, you less it by the existing 2 million, you're talking about a deficit of 7 million housing units. And this is exhibited when you go to our cities, you'll see demolitions happening. We are on a replacement model kind of construction. So you go to Kororo, all the housing units initially even measured in the 2 million availability are demolished as you go vertical and high rise. So that means this, we kujenga na kubomoa, we break as we build, we grow as we reduce. So the opportunity to go to the sustainable future housing is in the space of 7 million housing units. But also peaking from the population growth of 3.4%. That means if you get the 45 million Ugandans at a rate of 3.4, annually, Ugandans were also productive. 1.5 million Ugandans are born. Clear on the books. And that's how in the next, by 2050, will be 100 million Ugandans. The president said yesterday. So the readiness to begin to project to provide real estate accommodation for that coming generation is the real opportunity to you, dear investors. And you need to know that this will be exponentially growing. So if 1.5 is today, next year it will be 1.6, 1.8. And that you forget the existing deficit Judy talked about of 2.1 or thereabout. So pitching camp in real estate as an investment opportunity is a great, exciting opportunity I want to introduce to you. The annual housing demand averages about 300,000 units. She talked about 210 in Kampala. But the current development, when you aggregate all the developers together, those of you in this business, what you bring on the market on an annual basis is about 100,000 units. So even if we are looking at the current demand of 300, and you look at what is developed of 100, there is still a clear demand of 200,000 to fill in the residential space. But of course, the minimum desired growth is about 500 units. If you pitch into the absence plus the future growth, you're looking at about 500,000 units. In terms of budget, in terms of money, if you want to come into this space, I'll highlight quickly, if you took a statistic of the 50 million year plus quality of housing, those that can live 50 years plus, the deficit about 5 million, and you're talking about 150 million US dollars, billion US dollars. If you lower the scale to 25, the most houses you see in Uganda, their age bracket can go maximum to about 25 years. Same permanent. If you lower the scale, then the deficit goes to about 3 million housing units, and you need about 90 billion US dollars. If you go to the lower class of the housing, 10 years below, people who sleep in tents, grass-thatched units, whose life expectancy is not that big, then the deficit goes down to about 1.5, because then almost everybody is catered for. But then you also can as well say there is no deficit, because each one of us daily sleeps. So whether you sleep 10 or 15 in a room, somehow you have where to put the head. So these numbers should speak to the opportunities. The urban deficit is highlighted there. But I want to take you to projects. Next slide. We have a project that has been on shelf. And for this year round, we want really serious partners for us to be able to establish the first satellite city in this country. This land, if you go to the next slide, I want to move very fast so I can finish. I'll give you some numbers. Sits on 320-acre freehold held by myself under Key and Lock. And if we get partners that are interested in investing in this particular project in Bukerere, projected 8,000 to 10,000 residential units, excluding the commercial and the schools and the institutional that will be right within and the bus terminals that you see into the design. We're looking at absorption of about 10 years if we partnered with you on this project. We're looking at a mixed development, 1 to 4 to 5 bedroom units if you're in the residential subsector. the commercial and social, but I want to say it's very prime. And the budget for the residential side is about 500 million US dollars. So if you're an investor that is out there, knock my doors after here, we'll discuss and see how much you can pick off this development. The next slide is a location that is, I think, just on this expressway to Entebbe, in a location called Luboa, 80 acres, freehold, estimated units 1,500, and absorption of about 5 years if you developed all these units at a go, and again a mixed medium to high development, and you're looking at 2 to 4 bedroom units, including penthouses if we're able to include them. We're talking about a budget of about 150 million US dollars. This is a project that's ready that we can discuss and look at how we can together invest in that project. The next project is in the Naria area. This is a proposed Naria Pride. If you go to the next slide, to the facts, sits on 16 acres of freehold land title and planned and approved. Actually, as a matter of fact, the development has started. I'm happy to say with partners, with the Indian partner on this project, Messrs. Dot Services, because we pitched it as a design, finance, and build, and we adopt all models that suit your situation. And we're looking at an absorption about 5 years. It's about a 32 million US dollar project. If you join hands, they are doing the first phase. We're kickstarting the second phase in tranches of 200 units. So we can sign off this before you leave this week. The Ruzira Lakeside project, if you go to the next slide, is where the facts are. Master plan design, sits on 10 acres of land, freehold again. And for those of you who are new to Uganda, freehold titles are the best titles you'll find. There are other forms of titles, leasehold, as you know, but all these properties we're talking about are freehold and encumbered. And we're looking at about a budget of 40 million US dollars. This can grow, it's by the lakeside, and we need to explore the potential. Previously, we've captioned it as a diaspora village, because people from foreign countries love to be by the lakeside. And as you take note also around our lake water bodies, there's great potential. All these sites are not harnessed. Just across, you'll see an island. If we were to do estates, they would be very competitive. I'll take you to the next slide, Samson, as I move towards closure. We also deal with smaller projects, 1 acre project. If you look around that red tag, is the Bugorobi flats, which we built many years back, and we have about 1 acre there. We've developed. We're going high-rise vertical to save the green. And so about 100 units, and you need about $8 million. This is ready to start. If you come, we can partner and get this development moving. The next slide is a 1 acre in Bukoto. As you go to Country Club Kabira, on your left, you have Shell and KFC lease from us. So just next to KFC, and the flats that are right there, which were also built by us, National Housing, you have a 1 acre, and we have this development ready to take off. I think we are in an engagement, again, with another Indian partner. Hopefully, we can sign it off in the next 2 weeks. But this is such a prime location that you can have this project running in the region of $10 million. Being government, Samson and our dear investors, is that we are not only looking at the prime space that I've pointed out to. We have a call to go into social housing. We have a call to go into slum upgrade. We have a call to be seen to serve every Ugandan. When you go to the next slide, this next slide takes you to a location called Namungona. We've done about 200 units, which you see in the top and on the bottom. The only last one to go ground, initially designed for the elderly, so who will not find opportunity to go high rise. But when you take a look at the yellow line on the extreme left, is land 150 acres. Yes, occupied, under my hand and title as government, but there's an opportunity because of the primeness, less than 6 kilometers to the CBD, and we can change that environment. Now, the yellow line is the land we hold, but generally when you look across board, this is the nature of settlement in Kampala, this is the nature of real estate that we must be seen to transform. transition into better organized, planned housing. So if there are those of you who have funds that look to redeveloping some of these areas, slum upgrade, redevelopment, going vertical and accommodating numbers, freeing the land and therefore making better use and return from that land, we are ready to sign off with you. Fully serviced with tarmac road, with water, with sewer systems, right close. The last one is again an area of interest to many of you Ugandans who know once you're right at the only national stadium, Nambole Stadium, and on the left is where we call Chileka Slum, Kasokoso, commonly called Kasokoso. Now the Kasokoso again, if you go to the next slide, but for starters, what you see around is the business and the activity that's happening there, and this right in the CBD of Kampala. So for you as partners, investors, it's not enough to keep the city looking like this when you're there. We need to partner with you as government to make sure we change these environments. But if you take the blue line, right within the picture behind, that is the land. I thought you'd go to the next slide, which would be clearly seen. Yes, that one. So when you take the deep blue, is the 292 acres under my hand and title, squatted and seated as a slum. But generally, you see the entire environment is quite a slum. But the opportunity in this location is what you see, the standard gauge that the president talks about, designed around it, the Kampala-Jinja Expressway designed around it, and a number of other opportunities, like I mentioned, the National Stadia is there, and others. If we get a partner, or even the state of India, if they are happy to partner with us in redeveloping this area, 292 acres is such prime potential opportunity for you to partner with us. And we're looking at a budget of about 300 million US dollars. That summed up for the Kampala area, this gives you the summary that you're looking at about 2 billion US dollars worth of investment that you can partner with national housing, and the opportunities with you to pick any project that will fit your pocket, will fit your time. The last two slides is to give you an entry point into how this partnership can come through. What do we expect from you as an investor? One, as government, and Kasumba asked if I still have the Libyan seated on my books. Yes, but by January, come January next year, 2023, government will have repossessed 100%. And this discussion fully blown. Discussions have happened. Offers are trading across. And government is committed that that shareholding is returned. And that's why now we're looking at attracting you to not only to be in Kampala, we'll be going to the other cities, countryside, municipalities, and the other urban establishments to see how we can impact on the housing. But if you took this slide, it will speak of what we expect from you. We're saying that the national housing will be the special purpose vehicle in this case because we represent government, investment vehicle for the local content provision. Now, these are obligations that national housing will provide if you come to us. One, will facilitate your entry into the business, into the Ugandan market, but also guarantee that we shall make sure land is available to you. One, in close collaboration with the Uganda Land Commission. As a matter of fact, national housing is under, its mandate is under the Ministry of Lands, Housing and Urban Development, and therefore, whatever land that is needed for you as an investor through national housing, this land will be made available. We'll undertake preliminary project services to the site, whether they be designs like you've seen in the past case, master plans, and others. This we should be able to do, so we can start on a progressing project. We'll undertake to make sure all local authority approvals. An investor should not be walking corridors looking for NEMA, looking for Kira municipality, looking for Wakiso. We're saying as national housing, when we are partnering with you on this project, we'll do that homework. It's our duty. We shall guarantee services to the project site. I know we have energy, we have water. Many of you have suffered when you put up an apartment, 20 floors, then you struggle with the access and the associated infrastructure. We're saying as national housing, if we're in partnership with you, we'll walk that journey for you. That shouldn't be a dream. How we attract those costs from government, when it gets delivered, is our duty and obligation. We shall also undertake the stakeholder management. Again, as an investor, you don't have to be moving to the office of the president, the Minister of Finance. We'll do that handwork for you. We're also ready as a construction corporation, ready to undertake in the development. So then we have machinery, we have equipment, we have architects, we have engineers, we have surveyors. So then we can as well partner with you on an equity arrangement into the project. Of course, we have an established sales and marketing office. So when these units are ready, if they are residential units for sale, then already right from the start, our sales office is running and we'll be able to do this handwork for both of us. We are also committed to be the off-taker of some of the investments that you'll undertake. If today we agree on a property where we've given land, you've done 100 or 200 or 1,000 units, yes, within the time horizon of your investment, if your money is going to be here for 10 years, come year 10, your payment will be given back. So you can clearly map your investment with us on agreed terms. So if there are those of you who will say, I bring the money, I develop on this land provided with all the support infrastructure given, then National Housing is ready to be the off-taker. We off-take all the 1,000 units. We know Ugandans, we know the market. We are government, we go on the sales journey. I've mentioned we are happy to be an equity holder in the investment, depending on the terms and conditions. But we also want to secure your investment and guarantee the return to the investor. I've talked at the time. The return, when it's expected, it should come back to you. Of course, in some funding, like Islamic funding, we also accept profit sharing rather than interest, whichever they love. And we're also ready to undertake collaborations, either joint ventures or partnerships, whatever the case may be. Now that is what we offer as government, as National Housing, as an appetite to you to partner with us into this real estate and construction investment. What do we expect from you? And this is the last slide. The obligations of the investor-developer partner. One, you need to confirm to us your area of interest, whether in the residential, in the social, in the commercial, whether it is in student accommodation. I have calls like 1,000 from universities, Uganda Christian University, IU, people who are walking to us and say, can you develop accommodation for us? So if you express the area of interest, we are ready to discuss and engage with you. We expect you to provide adequate and flexible project financing, and that is the most critical one.